Recently, I've received a ton of DMs asking me to talk about trading strategies, how to find great setups, and overall how to be a successful trader. Now, I'm going to try my best to do this all in one take. It might be a lengthy video, but I'm going to go over all the websites I use to research, what key metrics I focus on the fundamental side, and if we have time, I'll tie it up into the chart analysis or the technical breakdown. Now, before we get started, the most important thing is to simplify everything you know about trading, finance, all of the above. Stop trying to sound fancy and overly smart and complicated terms. It's unnecessary. Elementary school level stuff so that you can easily comprehend it and apply it in the future. So the main thing here, when we start with any company, let's take CRDL for example. The first website I would use is Dilution Tracker. If we're shareholders, right, and we're going to be buying stock potentially in the near future, we don't want anything to get in the way of that, right? If we have a set amount of supply here for CRDL, which means that pretty much the shares outstanding or the total amount of stock that the company has issued so far is 61 million shares, well, now we're going to use that as a baseline, right? So 2.5+ years go by, right? It's now 2022, 2023, going into the next year, right? It really didn't move that much, right? From 61 all the way to 64.50, right? So that's barely moving, right? So there really hasn't been a lot of dilution in the past for CRDL, which is great. Now, if for some reason, right, we saw this expand and it went from, 60 all the way to 80, that would be a huge jump, right? That would be massive, right? That would be around 33, 30% of the entire supply. So that would extremely devalue the stock, right? And anytime there comes an offering, right, which brings me into the next point, the cash position here, right? When a company needs cash, they have to raise money through issuing of stock. So what's good sign is they probably didn't need to raise or be very dilutive in any way. Again, the past 2.5 years, which is fantastic. Now we look at the cash position, right? They have over 14 and a half months left of cash on their books, right? They have 30 million plus in cash. They only burn about 2 million a month, right? 6 million a quarter. Doesn't cost much to keep the doors open, right? So that's another point too, right? If the business, right, is burning, let's say it's burning, or I don't like that color, let's use red. If it's burning, let's say 30 million a month, right? That's a lot, right? It's very costly, or even a 30 million a quarter. It's very costly to keep those doors open, right? That's 120 a year just breaking even. So it's really good when you see biotechs and other companies where it's a relatively small amount of cash burn on a quarterly basis because really it only costs 2 million bucks to keep the doors open. Now, again, like we said, when we go back to the OS, it's a great sign that they're not, again, expanding that share supply because the second you do that and you offer, some sort of PR and say that you're going to be doing a discount to market, every issuer and investment banker starts jumping on that. They short stock, they knock it down, especially when they know Rule 144 after 6 months, they know that shares are going to hit that open market. And again, typically that affects the price of these stocks, especially in the small cap. So that's why I'm going over it. I'm being a little bit more repetitive on this aspect because I think it's very important here. If you're looking to trade these small caps, this is why I say we don't hold them because a lot of companies need cash. So they have this big pop, 40, 50, 60, 80%, sometimes 100% plus runs. And then all of a sudden, companies take advantage of that surge in price. They again raise capital, and what happens? The stocks drop. So again, that's why I'm mentioning it. Now, the next site that we would look at would be something like a FinViz, right? So we click FinViz, okay, and we go at CRDL. Now, this has this sort of interactive chart. I don't like it personally, but you could use it if you're not big into the technical side. I'm focused on the key metrics here, right? This whole window gives a very valuable piece of information, right? It shows you the stock performance over multiple windows, weekly, monthly, quarterly, right? It shows you the ownership from institutions and insiders, right? Again, the cap structure here, how many shares are short, what the bounce is or the performance from the 52-week low, target price, things like that. Okay, so I like to use FinViz as well because you could also scroll down and take a look at all the news, which again is important. You could see what, social media is saying about the stock, which again is all great things. And then again, they have income statement and other, financial things here. The next website that we could use is shortsqueeze.com. So again, we type in CRDL, right? And we see that there's about 148,000 shares currently short, right? Current shares short. Okay, and it's only about 0.2% of the float, right? We see 62 million, right? It's relatively insignificant, right? It's really not that much. So again, when you look at another stock, let's say Terrible, for example, right? Very significant, right? As you could see, extremely significant actually. 40 million shares, essentially, 27% of the float currently is short. That's huge. That's insane. So other stocks, very significant, some not so significant. And again, it shows you pretty much the same thing there, right? The performance, the trading volume on average, which again, I think is another very important metric here. Volume, right? We can't skip volume in terms of also liquidity, right? At what price is that volume trading? Very important because it's showing buyer interest, buying demand, overall buying volume, and then liquidity in terms of dollars, right? If we see the trading volume today, 3 million versus on average 18 million, well, that's down significantly. And especially if the stock is trading at $1, $2, $3, that could be 20, 40, 60 million in liquidity on average. So to pay attention to that, to make those mental notes, where's the stock now? Where was the liquidity 3 months ago, 6 months ago, 12 months ago, at the last Bitcoin halving, right? Things like that are very important to keep up to date because it shows relative demand on that buy side. Now, again, the stock could be selling off, could be a lot of liquidations, right? It doesn't necessarily have to be just buying, but again, I'm just sort of trying to prove my point there. Okay, and then the last part of it, which again, you could see that same thing, the insider ownership, which is great in terms of Terrible. 40% is owned by insiders, 20+% on the institutional side. Really, really good thing to see. And also, we could look at insider buys. All right. Now, when we go back here, I just ripped through a lot of things very quickly, right? Those are all important things that everyone should know before even looking at clicking that buy button. Okay. Now we look at something like CRDL, right? We have our entry here, which was at 98 cents, right? We go all the way up. The high was 189. So it's about 93% up from entry to where it closed, right? This was what, 162? So it's up about 66% conservatively. It never went below the entry point from when we called it out. And it's just, again, taking advantage of the timing in terms of where it's trading relative to the top all time, and then again, the bottom all time. And really, what happened, right, just to give you a quick technical aspect, right, is when we see this sort of downtrend break, they stopped this downtrend and had a really nice move up, pulled back, reaccumulated, took it up again, retest, and then just really started to explode. Okay, and then as we're looking at liquidity and volume, like we said, now we have to go to the charts, right? Look at this surge in volume, right? In daily. And then also when we go to weekly, right? Really, really good sign that we're seeing, right? The volume is going up exponentially here from where we saw, at the bottom, right? These are very, very low numbers here, right? We're seeing 300,000, 400,000, then going all the way up to almost 5 million. That's 10x. So that's a big jump there. Okay. Rising price, rising volume. That's a great sign in terms of volume analysis. That's a bullish interpretation there. Okay. So CRDL sitting on a ton of cash, very tight cap structure. They really haven't diluted or expanded that OS within 2.5+ years. All great signs. Super beaten down stock. A lot of positive news surrounding it. More buyer attention, buyer demand, and again, liquidity coming into the stock, which is fantastic. These are all the signs that we're looking for, right? Very, very important things. Now I want to shift your attention to the OTC and focus on wealth building portfolio stocks, or again, looking long term for investments. And that's going to be a deep dive into the book value and really understanding the balance sheets and the income statement. Now, PRTT, very short and simple for all you traders. We called it out between the 40 and 60 cent range. Here, it popped, it surged over 100%, came back down, retested this demand, and then again exploded all the way up to $3.10. Now, when you look back, right, mid-November, the 13th, we saw the low here was 54 cents. It melted all the way up to the third week in January, up 480%. And then where it closed this week is still up 370% plus from where we alerted it. Okay. A lot of people are making insane money here. And again, it's stabilizing at this level. So, how are we able to identify these stocks early? How are we able to see the potential before it truly plays out on the screen? Now, the next website site which I find is very useful is OTC Markets. Now remember, these other sites that we talked about, FinViz and Dilution Tracker, they don't index over-the-counter stocks. So to get all that information, the cap structure, the financial documents, all of those things, you have to go to OTC Markets. All right. Now, again, you can go to security details, right? You could see the cap structure here, which is very important because we're looking at the shares held at the DTC. This is a very updated number. It's about 5.5 million. Now, again, when we go back and look at the trading, right, liquidity and volume, very important, right? Pretty much the highest we've ever seen in this entire move from when I got involved in the stock, pretty much a year ago, is around 400,000. Okay, between $1 and $2. Let's call it, 150. Okay, so either way, right, when we look at this, now it's 5.5 million. It's not like the stock trades 5 or 10 or 20 million shares a day, which would be a lot of market maker interference, inorganic trading that creates that volume and volatility synthetically through computers, right? We're not seeing that here. It's very organic. It's extremely thin the way it trades, right? And as you could see, right, only traded 29,000 shares this week. Most of that supply, most of the shares issued are not free circulating. People are accumulating them. Sellers are flipping to buyers and vice versa. They're taking that stock off the market, which is why, again, off relatively low volume and low liquidity, the stock could make a 400 or 500% move up and then stabilize there, right? That's, again, the reason why is because it's so thinly traded, right? It's only 5.5 million shares held at the DTC. So that's a really good sign, right? If you saw a stock like this trade 10 and 20 and 30 million shares, you'd be questioning, that doesn't really make sense because there's only 9 million unrestricted. Okay, so just a side note, very important to me personally, though, but very, very good sign here that, again, a lot of that supply is really controlled and locked up. Now, when we look at the financials, this is the most impressive part to me personally, right? When we look annually, right, I always like to just make mental notes here, and we always want to keep that on the screen, right? We're going to look at these three numbers here in terms of, again, revenues and then where we are currently. So pretty much the revenues from 2020, 21, 22 went from 5 million to 78 to 93. And then again, we're on track to do like 100 plus so far, in 2023. So it's multiplying, growing, which is a great sign. So let's just, again, we'll put 93 million here at the top. And again, this is for 22. Okay. Now we look quarterly here. We're looking at the first three numbers, which we see at the top here. So pretty much 30, 60, 90, 97, pretty much 98 million in 3 quarters here for 23. Okay, so already it surpassed what it did last year, 2022 financial year, in 3 quarters. That's incredible. Okay, not only did it meet that, but it's already exceeded that. So that's a very good sign the company's growing. Again, we'll remove that because we are aware of that. Now we want to go and focus more on the net income. Okay, and that's really important because that's telling you what the business is taking home after taxes. So pretty much, right, in the first 3 quarters, what we're seeing here is around 31 million. So let's just do 3Q and then we'll do 31.5 million. Okay, and we'll do like 23. Okay, so now we'll just get rid of this one here, right? Again, just the first 3 quarters, and we go annually, right? We're looking here. This is pretty much the same thing that we saw 2020, 21, 22 year, and we saw 5 million net income, 20 million net income. Last year, 24 million net income. So we do that 24 million. And again, this was for 22. So again, just to reiterate what I said before, when we look this year in the first 3 quarters, we're already surpassed annually what they did in 4 quarters tremendously. Okay, that's huge. Now, when we take the EPS, right, we would take that 24 million and we'd again divide that out by 57 million, which is the OS. And I believe that is 42 cents EPS. Let me just do it on my calculator to make sure. That is 42 cents EPS there. Okay, or earnings per share. Now we take this 31.5 million and we again divide it out, the same number here. Let's do that by 57. That is again 55 cents earnings per share. So already, right, just in 3 quarters, it is going up really, really smooth, right? And let's just be optimistic here, right? Let's just go to again quarterly and we'll go down, right? These are the first 3 quarters in terms of net income. We'll call it like 8, 8.5, and 15, right? So let's say we have another quarter that's equal to or greater than Q3. Okay, so now we'll add 31.5 plus, let's just say they have another 15 million quarter. I think it'll probably be bigger, but now we take it's 46 million. Okay, so let's just do an eraser. We'll get rid of that quick right here. So now it's 46, right? Let's say hypothetically, this is what it is for 2023 annually, 46.5 million. We then divide that out by, again, the shares OS, and that would be 81.5 EPS. Now, again, it's not perfect, and it's possible that number could be bigger, but that's essentially double or very close to double what it was last year at 42 cents earnings per share. So the point here is that the company is growing massively, right? This is absolutely incredible, almost unheard of for an OTC company, guys. Okay, net income, this is what they have cash in the bank. And now when we go to the balance sheets here, we're looking quarterly. Look at how stacked, the assets are here. It's insane. I mean, look at this category here. I mean, it really is. They have $43 million worth of cash, $47 million in short-term investments, 50 million in net receivables, 83 plus million in inventory. I mean, these are crazy, crazy numbers here. We go down 7 million long-term investments, 140 million in property and plant, ton of assets, right? Almost 400 million worth in assets. And then we go down to liabilities. What's huge, and this is again, most companies do not fit this specific category. There is no long-term debt on the books. None. This is incredible. This is just a cash cow, just printing money here. Okay, and the liabilities significantly less, right? In terms of that short-term debt, only 3 million, other liabilities under 70 million. This is insane. Okay, really, really insane stuff. So now when we look at that audit from PricewaterhouseCoopers, right, we're going to see the updated numbers. We're going to see again what they're going to do with the potential acquisition, a share buyback I was talked about. So there's a lot of positive things here. And that reason, which is Wall Street finally catching up and realizing, yes, the numbers are legitimate. That's why the stock is not 40 or 50 cents. Now, it's $2, $3. I mean, it's up tremendous. Okay, so that's very, very important. The last piece of it, I want to show you a company that's not there yet, but fits a very similar profile, right? We want to look at stages of a company. Not every company is going to be identical in terms of sector, what they do for a business, the growth, the efficiency. All right, it's all different stages of the business. Positron, ticker POSC, also on the OTC as well, trades paper thin, only 10,000 shares traded a week, super, super tight cap structure, but again, is at that early stage like PRTT was in 2020, where it was getting that traction, but the numbers weren't really big yet, right? Where maybe let's say a year or two out from just having insane, just massive or explosive growth. So now when we go back here, right, we type in POSC, positron, and then pretty much you could look at the security details, right? The same thing, super, super tight, 5.4 million held to DTC. You could see even more, even though it's a little more unrestricted, the number of the DTC is less, it trades way thinner. I mean, it's only 10,000 shares. And when we even go back, 5,000, 7,000, 300 shares is traded a week. I mean, it really, really is paper thin, which again is another great sign because it could take an exponential jump up off a very little amount of stock. Now, when we go to the financials, right, what you're going to see on the surface is by no means comparable in any way, shape, or form to PRTT. And it's not meant to be because, again, it's not there yet, right? We're looking at massive numbers here. And then again, we look at Positron, right? These are very low numbers, right? We're not talking about 10 and 20 and 50 million, 90 million revenue. We're talking about a couple 100,000 in revenue, okay, each quarter, which is fine, right? No problem, right? This is not a big deal in terms of where we're at currently. We're looking a year or two down the line where it could potentially get to. And I think that, again, is very important. So when we look at revenues, right, it's only doing 700,000, 800,000 a year annually. That's nothing, right? In terms of net income, pretty much the same thing. They're almost at break even. And then when you look at the EPS, right, it's already down here. It's very, very close to neutral. So they're not really burning a lot. They really don't cost really anything to keep the doors open annually, maybe $1 million, $2 million at most. It's very, very thin. Now, again, to understand this company and why I see value, you have to click the video here in the top right corner. That will give you the full breakdown on what the business does, why I believe the revenues can go 5, 10, 15, 20, 50x very, very fast once they get approval, once they're able to operate at maximum efficiency and sell their systems. I think this company could easily start to turn into a 5, 10, 20, 50 million revenue company plus. And again, that type of growth would be explosive, would be exponential at the numbers there. But again, it's just not there yet. And that's okay. That's okay because the same thing like we saw with PRTT, right, is you have to have people that understand it. They have their own strategy and they believe in it, right? If you believe in this stock, I believe at one point a dollar, dollar 10, dollar 20, dollar 30 will be the same thing as PRTT, 3, 4, 5, 8, 10, right? It's not going to get there instantly. It's going to take a couple years, but it will be there, right? It will uplist. They will do big things. But again, just different stages of the business, which again is very important. Now would be an opportunity. And not for nothing, that's why we call them the wealth building portfolios. These are stocks that you're going to hold at minimum of 12 months. If you click buy, there's no point in clicking sell earlier than 12 months. You're looking very long term. You're looking for, again, retirement, that long term growth to really let it play out to maximum potential. Okay, so those are again just a handful of tickers here that I'm looking through. A couple metrics I think are really, really important. And then again, the same thing on the balance sheets, right? When we look annually or even again quarterly, right? There is no long-term debt. That is very, very important here. No long-term debt. So as the business starts to multiply, they have great margins. They have the potential to, again, like we mentioned, explode. So again, if you haven't, take a look at that video. There'll be a few links in the description below. Let me know your thoughts in the comment section. If you enjoy content like this and want to see more educational stuff, I would appreciate any suggestions. But that's pretty much it, right? Everyone is going to have certain values and metrics that they look at. Some things they value more, some things they value less. I thought give you the best of both worlds, talk about a public company, OTC companies, and pretty much tie it all into the same thing. So that is how I break down stocks fundamentally, how I find winning stocks. If you guys, again, appreciate this video, please consider sharing or reposting. I would greatly appreciate it. But besides that, enjoy the weekend. And as always, we'll see you in the next one.